Happy New Year from the folks at Breaking Views. We're just cracking into a few of our predictions, and one of them is about mergers and acquisitions. And there's a lot of people saying we'll see a resurgence again of M&A. Jeff Goldfarb, our assistant editor here, came up with a slightly different view. He thinks we'll see more carve-ups. So, Jeff, carve-ups are things like spin-offs where people sell businesses. We saw a lot of that in 2011. Yeah, this year, you're saying that there's some really big companies that are going to start to consider deals like that.
You had a massive amount of spin-offs. It was, there were companies that weren't confident enough to go out buying, but there was a lot of shareholder activism. Investors pushing for companies to do
so big deals like Kraft splitting into
$250 billion worth of the stuff.
And investors seemed last year to reward it.
Yeah,
right. They seem to want this.
The Motorola was a great example
of that. The specialization swing of the cycle. I'm sure we'll have conglomerates back again one day. But
exactly.
At the moment we're on that.
So the question is whether or not some of the biggest holdouts in this theme and this kind of trend will come around.
So when you say big holdouts, you mean people like PepsiCo, which is trading like a sort of humdrum food stock, but and gotten way outperformed by folks like Coke and Dr. Pepper. Yeah. And so it's the idea that they might get rid of the snacks division, try to focus.
They've been under pressure to do that. They've said they don't want to, but pressure may build on.
I mean, yeah, to Richard's point. I mean, if you have years and years or a long time of underperformance, eventually it catches up with you.
Right.
And
on the other hand,
start to lobby.
At points in the past, the snack foods business has been seen as an advantage versus Coke.
Right.
It's
but the current CEO's the 5-year trend for this current CEO has not been good in terms of shareholder value.
Who are some of the other holdouts?
You've got General Electric. You've got Berkshire Hathaway, which is obviously under questions about succession. Can somebody else really run that massive conglomerate? And whether or not those parts, some of these are a little bit far-fetched in terms of theoretical thinking, but you just never know when the pressure mounts.
You also mentioned my personal favorite, Goldman Sachs. The idea that they might spin off some parts of their sort of the businesses that would do better under a less regulated entity.
Right, and ExxonMobil is another one, and we saw a lot of spin-offs in the oil space.
So they're integrated guys. What about the private equity folks? I mean, where do they play into this? They've got tons of capital that they can deploy. Right. But there aren't a lot of willing banks out there to lend to them. They still talk about how valuations aren't quite, low enough for them to be interested.
Well, what's interesting that's happened there is that the biggest question for them is always they take on too much debt. There's too much credit. Now that's kind of gone away. Right. Now they're sitting with all this equity that they've raised that they need to put to work, and the funds that are 3 to 4 years old are now starting to there's a lot of backed up capital that needs to get deployed.
Is it use it or lose it money in the sense that they don't actually deploy it?
Not necessarily. They can go back to investors and ask to extend the life of a fund, which some have started to do.
Right.
But it's not what they like to do. They can hand back the capital.
You only make the 2. You don't make the 20.
Well, and don't forget, they're in a lot of cases charging investors for the privilege of not having invested that money yet, which investors kind of want them to put the money to work.
Right, and they've smoothed things over a little bit last year. A lot of them handed back quite a bit of capital.
But the problem is, of course, the risk is that they do silly deals like these private, investment into public equities. I mean, was it KKR or who we were talking about the other day that bought the stake in Kodak?
Right.
You have examples of that where they buy into these equities.
And you have a lot of firms circling around Yahoo, which is sort of a really curious deal for private equity. Yeah. We saw KKR did a big deal where they put in more than 50% equity.
Right.
So you just start to see kind of things that don't really fit within the traditional private equity world, and what that could do is end up pushing prices up. They've had a hard time finding the right prices.
Okay. Well, there's your prediction. One more prediction. We'll be back with more tomorrow from Breaking Views.